Hi everyone, Martin Bamford here, and this is your Money News Fix. 5 personal finance stories that are rocking the world of money this week. Everything you need to know in just a few minutes. Here we go. Property market activity and average house prices have experienced a spring surge. That's according to the latest official figures. HM Revenue and Customs report that UK property transactions reached their highest monthly level in March since their records began back in 2005. The official figures also show average UK property prices are up 8.6% over the past year. The non-seasonally adjusted HMRC data shows 180,690 UK property sales last month. That's more than double the number in March 2020 at the onset of the pandemic. The number of property transactions rose by 50% compared to a month earlier. House prices and transaction levels are being boosted by government incentives, including an extension to the stamp duty holiday in England, Wales and Northern Ireland, and the launch of new low-deposit mortgage deals. Changing property preferences during the pandemic has also prompted a flurry of housing market activity, with home buyers wanting to move out of cities and looking for more indoor and outdoor space. Older workers have been hit with the most significant fall in employment since the 1980s. A new report from the Resolution Foundation found that a fall in the employment rate for the over 50s was twice as big as that for those aged 25 to 49. The foundation also found that older workers take the longest to return to the workplace after losing a job. It's calling on the government to tailor retraining opportunities for the over 50s. In the report, the foundation claims the COVID pandemic has prompted a U-shaped employment shock, with the biggest impact for older and younger workers. Younger workers under age 25 experienced the largest drop in employment levels during the past year, but the over 50s saw employment rates fall by 1.4%. That's twice as much as the 0.4% fall for 25 to 49-year-olds. A group of charities is warning about the growing use of buy now, pay later services, with many users getting into problem debt as a result. Citizens Advice, along with other consumer groups, said that buy now, pay later is becoming increasingly popular with younger shoppers for online shopping and buying goods in shops. 45% of 18 to 34-year-olds have used buy now, pay later as an option in the past 12 months. However, the network of charities is warning it can be a slippery slope into debt. A quarter of those people who used buy now, pay later services subsequently regretted the decision or are spending more than expected. 4 in 10 people who used buy now, pay later in the last year are struggling to repay the debt. Citizens Advice wants firms to revise their processes and improve affordability checks before lending money. Alistair Cromwell, acting chief executive of Citizens Advice, said buy now, pay later borrowing can be like quicksand, easy to unwittingly slip into and much more difficult to get out of. It shouldn't be possible for people to sign up for credit without realising, and the fact this is happening so often signals that a drastic overhaul is needed. Price inflation rose in the year to March, with the Consumer Prices Index, or CPI measure of price inflation, rising to 0.7%, up from 0.4% a month earlier. The latest official figures show a higher cost for fuel, transport and clothing pushed up the inflation rate, despite the numbers coming in slightly below the predictions of economists. Lower food prices slightly offset the rise. Price inflation is expected to continue rising this year, driven higher by rising energy and oil prices. The Bank of England's central forecast is for CPI inflation to rise to 1.9% by the end of 2021, but others expect it to exceed the bank's target of 2%. Jonathan Atho, ONS Deputy National Statistician, said the rate of inflation increased with petrol prices rising and clothes recovering from the falls seen in February. However, food prices fell back on the year as prices of some staples were lower than at the start of the pandemic. 34% of drivers say an electric vehicle would suit their lifestyle and driving needs. A new study of 15,549 drivers commissioned by the AA found a further 32% find going to a petrol station a chore. This rises to 40% among women. More than 60% of those surveyed said they like the idea of waking up to a fully charged car. However, 49% of drivers said they feel less confident about driving driving an electric car than a petrol or diesel car. The research also found that 56% of drivers are unwilling to give up their internal combustion engine cars, and a similar percentage have fears around the reliability of the charging network, the national grid, and even the vehicles themselves. 81% of people think electric cars are still too expensive, but a large majority have never heard of the plug-in grant, which could help them make a purchase, while 50% have never heard of the electric vehicle home charge scheme. Edmund King, AA president, said, "After more than a century of the combustion engine leading the charge, it is not surprising that some drivers are only just catching up with all things electric. We are here to help petrol heads become electric heads." That was your Money News Fix. Don't forget to like, share, comment and subscribe. Thank you for watching. I'm Martin Bamford, and remember, when it comes to your money, the more you know, the faster it can grow.